We have G20 kicking off today. Of course, we've been chatting about it all week. What are the expectations from the markets? Is anything likely to come out of G20? Is it just going to be a talk shop?
Morning, Stephen. Well, we would all hope that there's going to be some action, certainly on the part of emerging markets. They've stated quite clearly that they would want some sort of global agreement or collective agreement as far as how countries manage their exchange rates and how this impacts on trade policy and respective trade balances. But as for whether anything concrete will come out of the summit, that remains to be seen. These summits are always famous for being talk shops, as you put it, rather than resulting in any sort of firm collective action agreement.
Of course, we've already had the German Chancellor Angela Merkel talking about the trade deficit and surplus that Timothy Geithner of the US would like countries to target, and really saying that Germany wouldn't support such a move. And really, at the end of the day, each country is going into this summit wanting to look after itself, isn't it?
No, absolutely, Stephen. I mean, we saw China announced a greater than expected trade surplus for October. Their trade surplus swelled to $27 billion, and that was ahead of market consensus estimates of $25 billion. While at the same time, the US achieved a trade deficit in the region of $44 billion. So although it was smaller than market estimates, it was still quite a considerable deficit. And as you say, those countries will be going into the G20 also looking to protect their own interests.
In the meantime, we've got the dollar really trading in a stronger range that we've seen it in the past week, around just below 138 against the euro. And that's also fed through to the rand, because we've seen the rand also coming under a little bit of pressure, haven't we?
Yes, absolutely, Stephen. I mean, the rand, it actually strengthened for some time yesterday, but against the dollar, we saw the dollar come back after we had some better than expected numbers out of the US. Jobless claims declined more than expected, and that seemed to boost expectations of a recovery in the US. So I think that helped to play into some dollar strength, and the rand definitely weakened as a result of that.
We've also been discussing that Chinese inflation data that was out this morning, 4.4% CPI for October. That's from 3.6% in September. Is there a concern perhaps in the market that China will have to raise interest rates again sometime soon?
I'm not sure that there's a concern that they'll have to raise rates, Stephen. We saw industrial production numbers actually moderate for October, although one would have to use the word moderate quite carefully, because it slowed a bit from 13.3% to 13.1%, which is still quite tremendous, robust growth. But the Chinese authorities are still trying to mop up liquidity in their market. They've raised reserve requirements for a number of banks, and last month also raised interest rates for the first time in nearly 3 years. So they certainly do seem to be trying to cool the pace of economic growth in China, although not necessarily slow it down too much.
Mining and manufacturing numbers out in South Africa today. On that manufacturing side, of course, we saw the PMI coming out recently, still below that 50 level. What would you be looking for in the manufacturing data today?
Well, Stephen, we're actually expecting an improvement in overall manufacturing production. We think that following pervasive strike activity in August, manufacturing production in that month actually slowed to 5.3%. So we're expecting it to have rebounded to about 5.8% year on year. And although this is out of line with consensus estimates, I think the market is anticipating a further moderation in manufacturing activity. But we think that there's going to be a rebound, largely reflecting the normalization of activity and production in the month. As far as mining is concerned, while we don't have an explicit forecast, certainly we don't believe that the 10.4% year-on-year growth rate that was achieved in August is going to be sustained into September. So we would be looking for some moderation in mining production growth.